You don't hear this often, but the IRS is giving a second chance. If you've been miscategorizing your team as contractors when they really should be employees, the IRS actually offers a way to come clean. It's called the Voluntary Classification Settlement Program. Admit it now, fix it going forward, and walk away with only a fraction of the bill.
To Full Throttle Finance. My name is Felicia. I'm your CEO at Clean Bee Consulting.
And I'm Alli, co-host and senior bookkeeper here. All right, we finally wrapped up talking about the One Big Beautiful Bill. Thank goodness.
Thank goodness.
Last week we did like a rapid fire on all of the topics we've covered in the OB3 and just kind of did a sweet little bow on it to send it off on its goodbye for the next couple of months until tax season comes around and we bring it back up again.
Right. We'll probably resurface it again later.
So if you missed it, go take a listen and you might find something that you missed in all of our other podcasts. So today we are talking about an IRS get out of jail free card, right? It's called the Voluntary Classification Settlement Program.
If you've been following us long enough, you know me, and I absolutely adore yapping about payroll and payroll compliance. The VCSP is actually a program that has been around in some format since 2011, actually. But I personally only learned about this program specifically at a networking event that I attended recently. And I'll let you know that those tax professionals also only recently learned about this as well too. So we thought that this would be an interesting program to dissect further and put some information out there in case you too did not know that this kind of a program exists.
Yeah, and I think a good place to start with this is going to be rewinding a little bit. We've talked before the difference between a 1099 contractor and a W-2 employee in a previous episode, and you can go watch that episode here. If you want a more detailed explanation, the IRS looks at three main factors, though, when we're talking about a contractor. It's the control over the work, the financial relationship, and the nature of the relationship. So if you set the hours, you provide the tools, and you control how the work gets done, chances are that a person is not a contractor, they're an employee.
Yes.
So contractors have a lot more independence. You know, they set their own schedule, they work for multiple clients, they carry their own business insurance, they handle their own expenses. It's a fine line, but misclassifying someone can have major consequences. So think of a contractor as someone like us. We have multiple clients that we work with. We have our own business. We do your bookkeeping, but we are our own business. Think of like a videographer, a photographer, someone who does social media. They have their own business. That is a contractor.
Right. And their business is not really tied to the work that you, as the person hiring them, provides to generate revenue for your business, right? I think that that's another key point there too, is that a videographer for a motorsport team can be a contractor because a motorsport team is not selling videographer services, but a technician on a team for a race team, right? They're probably an employee because you have control over what they're doing. So what happens when you get it wrong? Misclassification can trigger back taxes on things like Social Security and Medicare contributions. It can incur interest and penalties. And that's just on the IRS federal side of things. You could also face Department of Labor fines. You could face unemployment insurance back pay and potentially even lawsuits for lost benefits and overtime that you should have paid that individual as an employee, or that should have been open to that individual as an employee when you had them miscategorized as a contractor. It's one of those mistakes that really snowballs quickly if you get it wrong. So I will give a real life example. I used to work for a company that was in Colorado and I went remote. Like, they had a physical presence in Colorado and I moved to California. They let me stay on as a remote employee for the company when I moved to California. Everything was great. I was a salaried individual, which meant that I wasn't paid like something like 20 an hour. I was paid a flat rate salary for the full year that was split amongst the pay periods within that year. And when I moved to California, we kept that same structure. About 3 years into working as a salaried employee in California, the payroll processor alerted my employer that they were not legally compliant with the California Department of Labor and paying me what California stated the minimum salaried amount for a non-exempt employee would be. They had this at the time, I think it was like a 5 or 6 year plan that started somewhere like around 2015, I want to say. And if you were a salaried employee, your salary minimum was supposed to raise incrementally over 6 years. And so, the employer was very upfront once it was brought to their attention that they were not compliant with the state of California. They were upfront. They let me know. They did make me do the calculations to figure out like what I was owed, which was a little funky, but I was okay with that, right? Because at least I could make sure that I got the right pay that I was actually entitled to, because I was pretty frustrated at that point, right? But they wanted to make it right without involving the Department of Labor, because they knew that if I went to the Department of Labor, that the Department of Labor in California would come after them for penalties for not paying me what they mandated the state minimums to be, right? And the obvious reason why they didn't want the Department of Labor getting involved, right, was because of the fees and the penalties and interest. But also, labor claims like that against your business can drive up your experience factor in rating, which is actually directly correlated with what percentage of payroll tax you owe to the state for things like unemployment insurance. So again, one of those things that snowballs. Like, not only were they trying to avoid getting charged penalties and interest for being in the wrong, but they were also trying to avoid having to pay a higher percentage for their experience factors because they had made this mistake, right? Like a double whammy. So, they didn't want to agree to the increasing schedule moving forward. So they actually opted to move me to an hourly employee instead of a salary position, which was, completely shot down my confidence altogether, right? I'm a manager on the same level with like everybody else in our organization, but I was treated differently and I knew that. So it didn't help my morale. And eventually I got tired of it and I saw that I wasn't valued and I sought out different employment. So that's just kind of like a personal example of how these things can snowball. Like, I absolutely in that situation could have and probably should have, looking back at things, right, opened up a formal claim with the state of California, because I probably would have been paid out more than I actually was, first and foremost. But also, too, because I was so passive to the employer, they literally just got off with like a little tap on the wrist, right? Yeah, they got a free pass when that was a really, really big mess up. Like, looking back at it now and like how many businesses we've helped and how many payroll chaos messes we've cleaned up over the years, right? They absolutely needed some ownership and accountability in that situation. And I gave them the free pass by not bringing the state of California into this. But essentially, had this gone unnoticed, undetected, like either from the payroll processor, and let's say the state of California decided to audit them the next year, the state of California would have found this and they would have had the penalty fee, the interest, and the back pay that they owed me. And then they would have had all the DOL fines as well. And I would bet you 10 to 1 that there would have been some other legal parameters that the business would have had to follow to make sure that they did not make that same mistake moving forward. Also, too, it might have opened them up to realizing that they were also illegally underpaying other people in other states, too, because at that point, that company had progressed to having multiple remote employees for the company, and they hadn't really grasped the concept that even though the location of the bulk of the employees was in Colorado, if you have somebody in another state, that person has to follow the labor laws for the state in which they're living and they're actually performing the work. So For small businesses, especially in industries like hospitality, construction, motorsports, those kinds of industries, this can be really devastating, right? The IRS doesn't just look at the current year either, right? They can go back several years if they decide to audit you.
Which can get really messy. I mean, especially for yours. In the example you just provided, they'd been doing it for 3 years. Could have been a freaking hefty fine. Yeah,
It hurts me.
I know.
Sometimes I look back at my younger self and I'm like, oof, you let them walk right over you.
You gain so much confidence as you get older, sure. You really do.
Yeah, I was naive, right? I was young and naive. It was a remote workplace. The hours weren't bad. The pay wasn't terrible. I was complacent. So,
Best of us. And that's why it's cool, really cool that the IRS has created this voluntary classification settlement program, because sometimes people do make mistakes. And if you catch it and own up to it before the government notices, or you get audited, then you kind of get like a free pass, don't you?
so the VCSP is essentially the IRS's way of saying, hey, if you've been paying people as independent contractors, but deep down, you know that they really should be employees because of how you treat them and how that relationship actually works,
Right.
come clean with us. Now, we'll give you a deal. That's literally what they're saying with this. In their exact words, it says, in order to facilitate voluntary resolution of worker classification issues and to achieve the benefits of increased tax compliance and certainty for taxpayers, workers, and the government, the IRS has determined that it would be beneficial to provide taxpayers with a program that allows for the voluntary reclassification of workers as employees outside of the examination context and without the need to go through the normal administrative correction procedures that are applicable to employment taxes. And so, what that looks like is that normally, if the IRS finds out that you've been misclassifying workers, they can go back a few years and you could be on the hook for all of the unpaid payroll taxes, plus penalties, plus interest. With the VCSP, instead of paying years of back taxes and penalties, you only pay 10% of what you would have owed for the most recent year that you paid that individual. Moving forward, you would have to treat them like an employee. You'd have to put them on payroll. You'd have to pay the 7.65% of FICA taxes on them and potentially any state unemployment insurance or any state programs that would normally facilitate through the payroll workflows. But the main thing is that if you've been miscategorizing somebody for 3 years, the fee, if you go through the VCSP and you come clean and you agree to treat them correctly moving forward, you're only going to pay 10% of the most recent year. So let's say you had a contractor and you paid them about $100,000 every year for the last 3 years. If you were audited and they found that those $300,000 worth of earnings should have been treated as payroll wages and not contractor earnings, the entire 300,000 would need to go back through payroll, which means you would owe 7.65% on the 300,000, which is $22,950 just on that alone. Then they're going to tack on penalty, and then they're going to tack on interest, and then they might tack on some other additional fees or regulations or stipulations that you're going to need to follow in order to stay compliant with the government moving forward. So you could easily be in over $30,000 for that 3-year mistake that your business made. But what the VCSP allows you to do is it would only calculate what you owe off of what you paid that contractor for the last year. So if last year you only paid them $100,000, that means only 10% of $100,000 would be what you pay to settle the score, which is $10,000. So instead of owing upwards of $30,000 for your mistake, you can literally come clean and settle for 10% of what you paid that person for the last year that you've been working with that individual.
So much better. It's so much more reasonable.
So much better.
And just then own up to your mistakes. Like the IRS doesn't usually give get out of free jail cards. And if you've been doing it wrong, then this is your opportunity to get out of it kind of scotch free. $10,000
Right?
is I mean, and you're probably not even paying a lot of your employees that you're doing this $100,000. So you're getting out probably a
It's probably
lot
less.
less. A lot less.
And so there are some eligibility requirements in order to apply for the VCSP. And what that looks like is the following. You have to currently be treating the worker as a contractor, and you have to agree to start treating them as an employee moving forward, which means putting them on payroll, paying the payroll taxes, and being fully compliant and whatever that looks like in the state that you live and operate in. You also have to have been consistent, meaning that you must have filed 1099s for those workers for the last 3 years at least. So you've had to have issued them a tax form that shows how much money you have paid them for the year. You also cannot already be in trouble. You cannot currently be under an employment tax audit right now by the IRS or the Department of Labor or a state government agency. So you can't just be like, oh, I'm actually going through an audit right now. Turns out I do want to do this voluntary thing. No, they've already found it. Now you're going to be penalized. You're going to see interest and you're going to owe back taxes. That's it. They want you to get ahead of the game with this. And you have to make sure that all of your past issues are settled. If you were audited before, you had to accept and comply with the results, and you had to fulfill your end of the settlement before you can look at utilizing the VCSP to correct your miscategorizations.
Yeah, so if you want to apply here, we have a quick little how-to guide to get you going. So you need to file Form 8952. That's the official application, and we'll have that linked in the description for your reference. You'll need to file at least 120 days before you plan to start treating your contractors as employees. So you realize that you've been doing it, or maybe your bookkeeper, your consultant brings it to you and says, hey, buddy, you've been doing this wrong. You need to think about it, and you need to file this immediately, and then pay them 120 days. Like, it'll have to be a process that you go through. So you can have somebody that files it for you as a power of attorney on the form, but your business owner does have to sign the application. And then once you submit the form, the IRS will check your eligibility and then reach out to move things forward. And if you're accepted, you'll sign a closing agreement with the IRS and pay the reduced settlement amount in full. So be prepared. You find out that you need to file this form, or you decided you're going to do this, make sure that you've got the money in hand to do this so you can kind of clear your issue.
Yeah, and I think one of the cool things too that I ended up reading, like when I looked at the IRS's website, was that, like, let's say you do this with your contractors and you get everything right, and then 5 years down the road, or 3 years down the road, you actually receive a payroll audit from one of the agencies. They can't come after you for these earnings that you have gone through this program voluntarily for. Like, they can't touch it. They can't come back to you later on down the road. Like, it's written in the actual program that you will not be held responsible for any additional fees from that. That's part of what that closing agreement that you have to sign with the IRS, it states. So really, this is like legitimately a get out of jail free well, I guess get out of jail with a small bond.
Yeah, right.
So let's do some more examples, because I think saying this in action and talking about scenarios always makes it a little bit easier to digest and understand. So the first one, imagine you're a motorcycle race team, right? You've got a technician that comes to every single race weekend with you. You're telling them what to wear, you're setting their schedule, maybe you're even booking their travel, and they're pretty much only working on your team and your bikes. On paper, you've been calling them a 1099 contractor for a couple of years, but the IRS sees it in their eyes that they are an employee because you do have control over the work that they're doing for your program. If you decide to apply through VCSP, you can reclassify them right away. You can pay 10% of what you paid them last year and call it quits and get them categorized correctly. And again, that will increase your cost for that person moving forward, because you're going to have that 7.65% of employer taxes, but they are categorized correctly. They are protected by employment laws that they are legally obliged to get. That's why worker miscategorizations, like, why there's so much scrutiny about it, is it protects the employee and you're doing the right thing for the employee. Another example could be like a small builder, like a construction crew. Maybe you have like the same crew on site every single day under your foreman, and they're wearing your company shirts. They are using your truck and tools. They have fixed start and stop times, and yet they've been issued 1099s for years, right? Like that's not a project-based contractor model. That's ongoing employment. And the IRS is absolutely going to see that as ongoing employment when they audit you, if that time ever comes around. And so this next example isn't necessarily related to worker miscategorizations, but it's something that I've seen as a professional in the accounting and consulting space for the last couple of decades. California, back when Amazon was exploding, right? And e-commerce was really becoming a big hot topic, right? There's this thing called Nexus, which Nexus is what establishes a physical or a remote presence in any given state. So me as an online retailer, if I operated in Washington but delivered products to customers in California, Nexus determines that I have a physical presence because I'm delivering something to a customer in California. So Nexus will dictate that I need to collect and remit sales tax for California because that product, the end result is going to be consumed in California. And California wants me to collect and remit sales tax on that online e-commerce transaction. For a while, when Amazon was really starting to blow up, literally nobody was collecting and remitting sales tax for any of the states. It's not just California, it is like any of the states. But I will say that the state of California really started to have budget issues, in my opinion. And this was a low-hanging fruit way for them to collect the money. And they're probably experiencing budget issues because they were expecting to collect all of the sales tax on all of these deliveries that were getting delivered to California, but no seller was ever collecting it from the buyer, and so they weren't getting that revenue. And so California started coming after employers, and they wanted their share of the money that they were actually like legally owed, I will say, right? And so there was a period of time where I know a lot of big sellers on these big e-commerce platforms like Etsy and Shopify and Amazon and all of that. I know that a lot of those big sellers were trying to stay ahead of the game. And so they proactively went to the state and they were like, look, we were in the wrong. This is what we show that we owe you. Can we set up a payment plan? Because we're talking like years upon years upon years of sales tax that should have been collected that wasn't, that the company would just have to generate, right? It's not like they can go back to those orders for the last 3 years and collect that sales tax now and pay. It's a straight expense to them. So a lot of these e-commerce sellers just went to the state ahead of time and was like, this is what I owe. Can I set up a payment plan? And the state was like, yes, please. That's lovely. Thank you. The state likes that because it saves them time and resources. The company holds themselves accountable, right? Because they're like, no shit, I fucked up, for lack of a better word. Like, I do owe you this. I don't have all of this money that's gonna like close my business down and make me go bankrupt. Like, I'm being honest with you. I'm being truthful. I'm being forefront. Like, can we work something out? And I think that that's kind of like what we're seeing here, except this is actually a legit program that the IRS has put into place so that people can be like, I did a bad thing. I owe you money. Let's figure out what that is. Let's fix it so that I don't continue to fuck this up, basically.
And that's a wrap on today's episode. Worker classification mistakes happen more often than people realize. But the good news is you don't have to wait for the IRS to come knocking. The voluntary classification settlement program gives you a path to fix things, minimize the damages, and move forward with confidence. If you're unsure about your own situation, now is the time to take a closer look. And that's what we do best, or at least that's what we really enjoy doing. We do enjoy looking at stuff like that. So don't wait until the IRS makes the first move. If you're not sure your contractors are classified correctly, or you think the VCSP could help you, reach out today. We'll sit down with you, look at your situation, and make sure you're set up the right way. There'll be a link in our description with our website, and you can set a consultation and have a chat with us. So as always, we post new episodes every Friday, and we'll see you next time. Bye.